I think what gold is saying, the relentless surge in the price of gold is saying, hey guys, look at me. I'm over here. I'm neutral. I'm a reserve currency. You can't print me. And if you want to save your money in something that's not going down, take a look at me. That's the message coming from gold. It's just starting to work in a meaningful way. And, I see gold at $5,000 or $10,000 an ounce in this cycle very easily. And, I think that, nobody believed that 2 or 3 years ago. I think a few people are starting to believe that now. I know you and I believed it for a while.
Investors increasingly seek refuge in gold as a safe haven asset amid market turbulence. At the same time, China has made a bold strategic pivot, tripling the share of gold in its foreign reserves to 8%. Over the last 2 years, the country has imported around 700 metric tons of gold from the UK, a clear signal of its intent to reduce dependence on U.S. Treasuries amidst rising geopolitical tensions. Meanwhile, President Trump signed an executive order on March 6, 2025, in a historic policy shift to establish a strategic Bitcoin reserve. This reserve will be built from Bitcoin assets forfeited to the U.S. Treasury, effectively making the United States the largest known state holder of Bitcoin, with an estimated 200,000 BTC. This move underscores a growing recognition of Bitcoin as a strategic financial asset in an evolving global monetary landscape. Lawrence Lepard, managing partner at Equity Management Associates, delivers a compelling assessment of the crumbling old monetary system and highlights gold, silver, and Bitcoin as the essential lifeboats in the coming financial storm. According to Lepard, gold is finally beginning to assert its proper role as sound money. I believe we could see gold reach $5,000 to $10,000 an ounce in this cycle, he states confidently. From a geopolitical perspective, Lepard points out that China is making a deliberate bet on gold. Meanwhile, he argues that the United States can leap ahead, not by competing on gold, but by embracing a Bitcoin standard. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
The sovereign debt thing just keeps on ticking away, getting worse and worse. The U.S. deficits have not really been solved. The Doge program that Elon is trying to enact with the government, he even admitted the other day that, they're going to have a hard time saving $150 billion a year. And when we're running a deficit, the deficit run rate now is in the $2.2 trillion per year area. 150 doesn't move the needle that much. And so, because of that, what I think you're seeing, and everybody's seeing, I know I'm seeing, we talked about this as well, is just the relentless bid in gold. I mean, it's, gold is up 55% in the last year. And, every morning I wake up and there's a new all-time high. And to me, what that tells you is the market is saying we are losing confidence in sovereign currencies. We're losing confidence in the ability of these governments to balance their budget. And since they're unbalanced, we believe that they're going to debase the currency to make payments. And that's what gold is saying loud and clear. Near the end of the year, Bitcoin said that as well, although that's backed off a little bit. It was at 106, and now it's back in the low 80s. But the point is, these two independent sound money alternatives to fiat currency are, very, very large alarm bells. And then we're starting to see a few other alarm bells, as we talked about. It's interesting, the dollar, which was 109, 110, at the end of the year, has slipped it below the 100 mark and probably has lower to go. So, in my view, what the markets are coming to realize is that these governments are trapped and that the only way out is to print money. And we now live in an inflationary environment. And the average investor, I think, made the mistake. The reason they rallied the stock market to new highs, post all the COVID print, was that they believed we were going to go back to the deflationary world that we lived in from the early 80s until 2000. And I think in 2000, when COVID came and they printed money and sent out stimmy checks, the trend changed, and we now live in an inflationary world. And until we solve that, it's not going to, we're going to have continuing bouts of inflation. And historically, inflation has been pretty bad for stocks. So, the stock market is really starting to get hit. And by and large, the analog, or the obverse of that, which is gold stocks tend to do well when the stock market's doing bad, and vice versa. Gold stocks have really started to rocket. We had a great first quarter, and this month is looking pretty good too. So, and what I would suggest is that you turn this upside down and look at it as a slightly different thing. It's more like, the old monetary system was stable, and the new monetary system is an avalanche. And we've had enough, snowflakes fall, that the avalanche is broken free and it's got a ways to run. Or said another way, consider the old monetary system is the Titanic, and it's being transitioned and changed to a sounder monetary system. And the lifeboat seats are represented by gold and silver and Bitcoin. Okay, yeah. So I bought some gold at $1,000 an ounce, and I bought some Bitcoin at $5,000 a coin. And those are seats in the lifeboat. The cost to you today, you want gold, it's 3,300. You want Bitcoin, it's 85,000. Same seat as the one I bought, but it's more expensive because we're a little further down the road. So, okay, Mr. Investor, do you want to continue and hang out on the Titanic, or do you want to pay more for the seat? Because if I'm right about the monetary system and it failing, we know that, if you had been on the Titanic and the same kind of thing had happened, it wouldn't have mattered what you had to pay for the seat. You wanted the goddamn seat because the alternative was terrible. So, it's being a little bit extreme, but perhaps not too much. I mean, this monetary system really is quite broken, and you need to read the book, because the book talks about the history of these kinds of things. And, it may not go all the way to the Titanic sinking. I mean, we may just have really high inflation and a monetary reset. But even in that case, gold and silver and Bitcoin will be an advantage to have over, all the other traditional assets. A couple of things have really benefited Bitcoin the last year or two. So the Democrats were very, very negative on Bitcoin. Elizabeth Warren's anti. Two things that, and I used to deal with a lot of my peers in the investment management business, and they say, yeah, Larry, it's all great, except the government's going to come in and shut this thing down, right? I mean, this is too good to be true. They're not going to let you do it. Well, in January of 24, the ETF got approved. All right, well, that's not the government shutting it down. And then, of course, Trump got elected, and he embraced it, because a lot of Bitcoiners supported him and were helpful in winning the election. So, and then he said, we're going to hold on to what we've got, and we're going to set up a strategic Bitcoin reserve. And then Senator Cynthia Lummis from Wyoming has proposed that they actually purchase Bitcoin and add to that reserve. I mean, we've got the reserve contains 200,000+ coins that they confiscated through law enforcement activity back when it was Silk Road and doing all kinds of illegal stuff. And so, yeah, I mean, I think what you're seeing is at least the red team of America realizes that digital assets are important, and that leading in digital assets is important, and that the United States should be aggressive about leading in digital assets. And there's a guy named Jason Lowry. He's a major in the Air Force. He's now in the Pentagon, who wrote a book about this and basically said, it's going to be important as a sovereign nation that you have a strategic reserve, just as the U.S. has a strategic gold reserve, or I should say theoretically has a strategic gold reserve. We don't know if it's really there. The country, any large country should have a strategic Bitcoin reserve. And I believe that to be true. And so, whether the Lummis bill passes or whether they're actually able to start buying Bitcoin, it's unclear. Excuse me. Excuse me. But I think that just the fact that we have a reserve and have announced that we view it as an important thing is a positive. And honestly, I think that if you think about it from a game theory point of view, I mean, it's very clear to me that China has made a bet on gold. Those of us in the gold world know that they claim reserves of 3,000 tons or slightly less, I think. But in fact, we've looked at the shipments from Switzerland and other places into China, plus what they mine locally, and we know that they hold much, much more than that. I think there's a chance that China would make the bet, okay, well, let's solve that by going back to the gold standard. One way for America to perhaps leapfrog China.
Over the past 50 years, the US dollar has experienced dramatic shifts, rising in strength at times, like during the past decade, and facing prolonged declines, such as the 10-year slide beginning in 2002. By the end of 2024, the dollar made up 58% of global foreign exchange reserves, down from 65% just a decade earlier, a noticeable erosion of its dominance. While some still argue for the dollar's continued supremacy, that position is becoming increasingly difficult to defend. If current policies are aimed at weakening the dollar's global role, the world could face a level of monetary instability not seen since President Nixon severed the dollar's link to gold over half a century ago. With gold, Bitcoin, and other assets gaining traction, what do you believe is the most reliable store of value in today's uncertain economic environment? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.